all I see ahead is a tsunami of technology that is so deflationary we can't get our heads around it. So yes, we will get business cycle inflation. Where will inflation end up in this cycle? I think it ends up below 2% and then picks up again and maybe gets to 4% and then comes off again. So I'm not wildly concerned by inflation, but as we said, those prices won't fall. So we've still got that issue. But if I look further ahead, I think this is maybe the most deflationary period anybody's ever lived through because of robotics and AI. It's we're creating infinite people, or people in inverted commas, at zero cost. I mean, Amazon now employs more robots than people. So they're the largest employer in the United States, I think, outside of the Postal Service, or maybe the largest employer. But they have more robots now, and the robots work 24/7, 7 days a week, never complain, never take a tea break.
Raoul Pal believes that technology, particularly robotics and AI, will create a highly deflationary future that's difficult to fully comprehend. He expects inflation to stay below 2%, with brief upticks around 4%, but isn't overly concerned about it. Pal sees this as one of the most deflationary periods in history, driven by advancements in technology. He points to Amazon's use of robots, which now outnumber human workers and operate non-stop, as a key example of how automation will reshape economies by providing near-infinite, low-cost labor. Make sure to watch the rest of this video where Raoul Pal explains that we are on the brink of an enormous technological revolution. Also, if you enjoy listening to crypto-related content, please show your support by liking and subscribing to this channel by following the link in my bio. And get access to my free daily crypto updates and expert predictions direct to your inbox. Each newsletter contains market intelligence, on-chain data and latest updates from experts in the crypto space. All of this is available completely free of charge. Signing up only takes a moment and you can always change your mind later on. Now back over to Raoul Pal.
Exactly, they never complain, don't have any HR issues, nothing. And so look, if you step back, it means that everybody is economically incentivized to use technology as opposed to people. That's a fact. So go to a Tesla factory, it's all robots. Go to any modern factory. So even if the re-onshoring of manufacturing in the US, a big Trump thing, they're not going to employ people. It's not the 1950s anymore. This is a very, very different world where nobody employs people if they can avoid it, because technology is so much cheaper and more effective. So what is going on is every 4 years, all of the major governments around the world have to roll the debt. Now, it's this 4-year cycle, something I call the everything code cycle, because in 2008, there was a debt jubilee of where they reset interest rates to zero. All of the governments, therefore, didn't have to pay interest for a while, so it was a break on interest. So it was like a debt jubilee. It's like, don't worry about it, guys. Don't pay your interest. Sort out your debts. They all restructured their debts into the 3 to 5 year sector, and so 4 years being in the middle of it, and it's created this perfect cycle that's been happening since 2008. What has happened this time around, because we had the pandemic inflation, it's been very late for them to cut rates. Normally in this point in the cycle, they would have cut rates back down to trend rate of GDP growth, let's say 2%, but they couldn't. So what's happening is the debt is now compounding into new debt because they're issuing new debt to pay old debts. And so what you've got is a tsunami of debt that's happening, which is why they need to get interest rates down. So it's that dynamic that's causing it, is the issuance. Something will give at some point. Either the governments are going to have to stop it because everyone's got the same problem, and the UK interest rates just hit it was like a 30, 40-year high. You know, it's unsustainable in highly indebted economies. So they're all going to have to do something. Now, whether it's a yield curve control idea, which is they kind of, as opposed to forgiving all the debt payments, they say, we're going to cap interest rate on government debt at X%. Or you have to do QE, but certainly what they're desperate for is to add liquidity into the system. There's a tightness of liquidity that stops people buying the bonds, which is why the excess issuance isn't being bought. The other issue is the dollar's too strong. So it's expensive for the Japanese and the Chinese and the Europeans to buy US government bonds. So again, it's another reason they've got to get the dollar lower, got to get the rates lower. And then I think it'll free up the 10-year. Trump has already said interest rates are too high. And I think Scott Besson's first job is to figure out this particular mess.
Thanks for watching. Please don't forget to subscribe for news and expert predictions direct to your inbox.